The first rates are in. The Nifty is down about 78 points.
Right now, actually, the markets are at the day's low. It's a 225-point cut on the Nifty.
We have a market on Monday, which is eerily similar to what happened on Friday, which is the Nifty down about 200 points.
Manic Monday for the bulls then. More number of stocks declining than advancing. Hello and welcome to CNBC-TV18. You're watching Markets Today Sell-Off, the show where we track all the 6 hours of the day's trading action in just 5 top headlines. I'm Nigel D'Souza. Here are the top headlines for the day. Stock markets posts the biggest single-day fall in 2 months. The Sensex declines nearly around 900 points. Financials drag for a second session in a row. All sectoral indices end in the red. And the rupee hits a 1-month low against the dollar. This on account of the global dollar surge, but the RBI dollar selling secures the rupee from a steeper fall. Manappuram Finance tells CNBC-TV18 that gold loans to lower economic segments are below pre-pandemic levels and will keep growth muted for the current fiscal. The company says it isn't losing business to banks. Adani Power rallies close to 5%. They are all set to acquire DB Power's thermal plant for over 7,000 crore rupees. Will help expand Adani Power's offerings and operations in the thermal power sector. The metal index falls close to around 3% today. Tata Steel, Hindalco, they down between 2 to around 5% odd. Credit Suisse remains cautious on the steel sector. Well, here's a lineup of what we have in store for you. It's a power pack show as always. In Market Opinion, we have Nilesh Shah, Managing Director of Kotak Mahindra AMC, and Lawrence Blanco of CLSA. In Corporate Voices, we have Jayaraj Govindaraju, Executive VP, Microlabs, and VP Nandakumar, Managing Director and CEO of Manappuram Finance. Well, let's begin with the day's market action, though. The stock markets, they posted the biggest single-day fall in nearly 2 months. The Sensex declined by close to 900 points. All sectoral indices were under some pressure, and they ended in the red. Anuj Singhal joins us to run us through all the market action. Anuj?
Well, not a good start to the expiry week. Second day running market had big losses after Friday's losses. In fact, today was worse than Friday as well. The Nifty is now trading below the near-term support levels of the 10-day exponential moving average. And it looks like maybe the mean reversion trade to 20-day moving average is on now. And what was disappointing for the bulls was second day running, the market leading sector, which is the bank Nifty, was underperforming. In fact, seeing serious selling. In 2 days, it's down over 3%. It's all global in nature because dollars rally has led to this move. And in fact, back home as well, while the euro is below parity once again, the rupee is still holding 80, maybe because of the decline in Brent crude prices as well. In terms of stocks, well, everything was down. I just want to highlight a few financials. So Axis, the HDFC Twins, State Bank, Bajaj Finance were all lower. Commodity and commodity consumer both were down. Tata Steel and Asian Paints. Adani Ports was down. Tata Motors was down. Larsen and Toubro, and the large cap IT stocks like Infosys and Wipro. So across the board, there was quite a bit of sell-off today. No hiding place.
That's right, Anuj. No hiding place. And one thought that Friday was a bad day today, in fact, was a little bit worse with the markets ending at the low point of the day. Good time to get you some market opinion, though. Nilesh Shah, Managing Director of Kotak Mahindra AMC, said that he expects the Indian markets to consolidate and maybe see some bit of correction going forward. Let's hear him out.
I think now the market has to take a little bit of respite and even correct a little bit. This will be driven by a variety of factors. One, the recently concluded quarterly earnings for June 22 quarter, that's marginally below expectation, driven mainly by some large stocks, and overall breadth of the earnings has been positive. So clearly, market has discounted breadth of the earning, but it probably has to discount some disappointments in larger names driven in automobile or in oil marketing companies. Second, globally, scenario doesn't look that good. There is a meeting at Jackson Hole where US Fed and other central bankers may try to be hawkish. That will weigh on the mind of the market. The only concern right now is that our valuation continues to remain above historical averages vis-a-vis our peer group. We have always traded at a premium, but today the premium is higher than our historical average. My recommendation is please do systematic transfer plan. Use every correction as an opportunity to invest. You'll have to invest on a bottom-up basis in a market like today.
Well, in more opinion, Lawrence Blanco of CLSA said that markets look overbought and expects a greater downside risk from the medium-term perspective. Take a look.
Unfortunately, we've seen this pretty broad trading range for the Nifty year to date, roughly 15% wide. So we've really traded between 16,000 and 18,000 year to date. And the rally that we've seen off the June lows is now taking us into that resistance zone, which is basically the highs that you made back in March and the highs that you made in January. And in conjunction with that resistance area, we have some of our shorter term indicators flashing buying exhaustion. So that comes from our DMARC indicators. So we do think there's a downside risk for a correction within that range that you've seen year to date. We need to be aware that the upside risk isn't attractive here. And even if we just take it to the midpoint of the range, we have greater downside risk being capped at the 18,300 area. And our view for US markets is that we do think we retest the June lows, which does leave the Nifty vulnerable to fall back to that 16,000 area, which is where we've seen the lows develop in June as well as back in March. So there's definitely a risk of falling back to retest the lows. We think that is a likely event basically going forward. And the best case scenario is actually to find support at the midpoint of this range where the 200-day moving average sits, and that's roughly at the 16,800 area. Base case is that we have a 5 to 8% correction, which puts us roughly back in the middle part of the range.
It wasn't just equities. Crude prices as well fell as investors were concerned that aggressive US interest rate hikes might weaken the global economy and fuel demand, while a stronger dollar also weighed. Manisha Gupta joins us to fill us in with more details on that. Manisha?
Well, yes, after 2.5% of decline in the previous week, the crude oil prices are extending those kind of losses today as well. Markets keeping a keen eye on the Iran nuclear deal. If that does go through after nearly 19 months of negotiations, then we are looking at more supplies from Iran coming into the market. What it does for Iran also is that it could lift sanctions on 17 Iran banks and nearly 150 economic institutions. When it comes to crude oil supplies, well, Iran would be able to export nearly 50 million barrels per day in a matter of 4 months. If you look at the Iran's current supply, that is at around 2.5 million barrels per day, but in a 6 months it is estimated that Iran will hit its maximum capacity of around 3.7 million barrels as well. And not just Iran, the Chinese weak economic data also continue to weigh on the crude oil prices. So does the fact that the US dollar index is trading at around 5-week highs at above 108 there. If you look at the monthly open and close in case of crude prices, the last 4 or 5 months, crude has been able to keep above $100 a barrel. But for the month of August, where we have seen 100 just about hold at some times, it mostly has been in case of its 90. So 90 is the new 100 as far as crude prices go. Well, the markets also believe that it is the near-term factors which really seem to be weighing onto the markets. There are some uncertainties, like if the Iran nuclear deal does not go through, if there is a major hurricane in the Atlantic Ocean when we hit September and October, and the European Union sanctions on Russian oil also kick in on 5th of December. And apart from that, it is the OPEC and allies meeting on 5th of September, where there is a possibility that they could talk about production cuts as well. So there are various uncertainties, but at this point in time, with the cues that we have, it still is bearish for crude.
Okay, got that. Thanks, Manisha, for that. Well, in its latest round of rebalancing, the FTSE has included Bharti Airtel partly paid shares and dropped Vodafone Idea, Oro Pharma and SAIL as well from the index. The changes will come into effect on the 16th of September. Sonia joins us to run us through that list. Sonia?
Well, thanks a lot for that. As you rightly pointed out, very interesting changes here in the FTSE rebalancing. So Bharti Airtel's partly paid up shares will be included. Not just that, in the migration to large caps, you have a lot of these stocks that have done exceptionally well in the recent past, whether it's Tata Elxsi, TVS Motor, Varun Beverages, HAL, There's even 197 communications, so a good mix of stocks over there. You have the migration to mid-cap stocks where there's CG Power, Gujarat Fluorochemicals, Indian Hotels, Linde India, Schaeffler India, and these are a bunch of stocks that have been migrated to the mid-cap space. Now, if you look at the stocks that have migrated from large caps to mid-caps, so have been brought lower, those are Aurobindo Pharma, Gujarat Gas, Lupin, NMDC, Star Health, SAIL and Vodafone Idea. While in the FTSE rebalancing, there are 24 stocks that have been added to the small cap list as well. So very interesting bunch of stocks. All of this comes into effect from the month of September.
Thanks a lot for that, Sonia. Meanwhile, Kotak Mahindra Bank fell close to 2% after it failed to make it to the FTSE Wall index, while Piramal Enterprises ended in the red after MSCI migrated the stock to small cap from the standard index on Friday. Nimish tracks that closely. He joins us to fill us in with more on that. Nimish?
Both the stocks are under pressure purely on technical reasons. The first is Piramal Enterprises. That stock is under pressure because late on Friday evening, MSCI has decided to move Piramal Enterprises to small cap index from the standard index. Now, in the standard index, the allocation for Piramal Enterprise is close to $150 million. But do remember, there is a demerger process which is on. So the demerger date is August 30th. So the exact quantum of selling pressure in Piramal will be known only on the 30th when the demerger happens. But because the demerger process is on, MS has decided to move Piramal Enterprises to the small cap from the standard index, and hence that stock is under pressure today. Purely technical factors, and the stock had seen a bit of a run up in anticipation of the demerger, so you're seeing a bit of unwinding as well. So that's the reason why Piramal Enterprises is down 2% in today's trade. Now coming to Kotak Mahindra Bank, see that was a one big stock which was much anticipated that maybe it will get added to the FTSE World Index. Now the shareholding pattern was actually came after the cutoff date, so there was a speculation whether it will be added or not. Unfortunately, FTSE has not considered the June shareholder pattern for the September review, and hence Kotak Mahindra Bank is not added to the FTSE World Index. Now the next review is only in December, so till then it's unlikely that Kotak Mahindra Bank can get added. Now according to some brokerage reports, the anticipation was that maybe if it's added, and if it's added to the full investability, there could be a buying of close to $700 million. So that's an eventual probability which can come in the December review. But as things stand, Kotak Mahindra Bank today is under pressure because FTSE is not added Kotak Mahindra Bank to the FTSE World Index, which was a kind of an anticipation. So both Piramal Enterprises and Kotak Mahindra Bank are today down largely on technical factors. One, MSCI moving it to small cap for Piramal, and for Kotak Mahindra Bank not getting added to FTSE World Index is the reason why that stock is under pressure.
Well, moving to the second headline now. In the currency market, a global surge in the dollar index took the rupee close to around that 80-odd mark. But the RBI's dollar selling secures the rupee from a steeper fall. Meanwhile, dealers have said that the rupee remained vulnerable to the global sell-off moves, but is stronger due to the sharp price we've seen in crude oil prices and also the stronger than expected FII flows. Lata joins us to fill us in with more on that. Lata?
That's right. It's not so much a rupee weakness story as a dollar strength story. Globally, that index has gone back to 108 plus, a level we saw way back in mid-July. And that's because of the risk aversion and therefore the going back to safe haven asset, which is the dollar. The risk aversion coming on the eve of Jerome Powell's speech at Jackson Hole, which is scheduled on Thursday. The market's fear is that he may sound more hawkish than what the market is forecasting at this point in time. It's forecasting a cut sometime in 2023, and it's quite possible that Chairman Powell may scotch those expectations. What we have seen is actually weakness across, and you'll have been speaking about it, the Chinese yuan has gone to 6.8. That's because there were, of course, rate cuts in China. Euro has gone below parity. And all EM currencies over the last 2 trading days have lost at least 1% vis-a-vis the dollar. So basically, again, a dollar strength story. In India itself, people had gone, of course, seriously short the dollar versus the rupee. So there was a bit of a positioning. And you saw as the rupee moved towards 79.90 towards the dollar, the Reserve Bank came in and supplied a lot of dollars. So looks like the Reserve Bank is still protecting that 80 mark. But there are other factors that are also protecting the rupee. Crude price is much lower than what it was a month ago when the rupee had gone to 80. Likewise, FPI flows, foreign flows are much higher than what they were a month ago. but the rupee will remain vulnerable to global ebbs and flows of the dollar. We have to wait really for Thursday to see whether the tide changes.
Thanks, Lata, for joining us and giving us a quick currency update. Which brings us to the third headline today. Manappuram Finance was down close to around 4% after the company told CNBC-TV18 that gold loans to lower economic segments are below the pre-pandemic levels and will keep growth a little bit muted in this fiscal. The VP, Mr. Nandakumar, the MD and CEO of Manappuram Finance, said that it was not losing business to banks. Let's hear out what he had to tell us.
What is happening is NBFC customers, mostly from the lower end of the pyramid, their demand has come down. They were typically the customers of an organized sector, and they are now our customers. So that segment is yet to pick up. It is started slowly picking up, but it has not come to that pre-COVID level. It is still lagging. We hope things will improve in the coming 2-3 months. Only from the existing customers, there is some sluggishness in demand. So what I look forward is in 1 or 2 quarters, the numbers will come back. Both growth will come back. And here onwards, we feel like it will slowly grow. This year itself, we expect from that stage to a growth of around 5 to 10% this year. Next year, our usual growth of 10 to 15% will be achieved. This is our expectation.
Well, moving on then, getting straight to the big money control exclusive today. We learned from sources that Radhakishan Damani will be at the helm of Rakesh Jhunjhunwala's trust. The big bull had planned everything, given his recent illness. Santosh Nair is here to fill us in with more details on that. Well, Santosh, tell us first, why Mr. Damani?
Well, thanks, Nigel. It shouldn't come as a big surprise, really. Mr. Radhakishan Damani was someone whom Mr. Rakesh Jhunjhunwala held in very high esteem. In fact, Mr. Damani was a mentor to him when Mr. Jhunjhunwala was just learning the ropes of the trade back in the 90s. In fact, even though their investment styles were very in stark contrast to each other, almost like chalk and cheese, and so their personalities, there was a connect, and they got along very well. And always Mr. Jhunjhunwala used to say that Mr. Damani has been a friend, philosopher and guide, and without his guidance, Mr. Jhunjhunwala said that there was he himself did not have an idea as to where he would have been in life today. The choice of the other two people as trustees of that estate is also fairly interesting. One of them is Mr. Kalparaj Dharamshi, who was more like Mr. Jhunjhunwala's equal. They're both almost of the same age, more of a friend than anything else. And then there is also Mr. Amal Parekh, who's been one of Mr. Jhunjhunwala's protege. So there's been a lot of speculation over what exactly will happen, but this was something Mr. Jhunjhunwala had been planning for quite some time. In fact, according to sources in the know, Mr. Jhunjhunwala had started planning for it way back in June itself, and he had also reduced his trading portfolio to almost nil. Mr. Utpal Sheth and Mr. Amit Goela, they will be looking after the day-to-day running of Rare Enterprises, as we understand from sources.
Okay, all right, Santosh, thanks so much for joining in and giving us that quick update. Well, time to slip into a short break, but you stay with us. We'll be back in a jiffy with the other headlines that we're tracking for you. Welcome back. You're still with us on Market Sell-Off. Let's get to the remainder headlines that we're tracking for you. Well, the fourth headline today is Adani Power was up close to 5% after it said that it was all set to acquire DP Power's thermal power plant for around 7,000 crore rupees. Rima joins us to fill us in with more details on that. Rima?
Well, I'm actually tracking Adani Power because they've agreed to acquire DB Power Limited for an enterprise value of more than 7,000 crore rupees. DB Power operates and runs a 2 into 600 megawatts thermal power plant in the Champa district at Chhattisgarh, and the acquired company DB Power had an annual revenue of 3,500 crore nearly in FY22. Now, the reason for Adani Power to acquire DB Corp's thermal assets is it will help Adani Power expand its offerings and operations in the thermal power sector in the state of Chhattisgarh. Back to you.
Well, Credit Suisse remain cautious on the Indian steel sector, and they have an underperformed rating on JSW and a neutral on Tata Steel. They believe that spreads are likely to revert to historical averages and also will be lower than what we saw in the past year. They see a risk to regional prices with weak Chinese property data. They have given three broad reasons on pricing. They see a significant risk to domestic steel prices, as they highlight that FTA prices are down by close to around $80 per ton, and 50% of Indian imports coming from FTA nations. Now, Indian steel prices are now at a premium of around 19% in comparison to FTA import prices. That compares with 2% historically. Additionally, they say that EU prices have corrected by close to around $40 per ton this month on the back of weak demand. Point number two, they state that coking coal prices, which was losing its way, has suddenly rebounded by more than $70 per ton. That's what will put pressure on spot spreads. And finally, Chinese net steel exports continue to remain elevated and were up more than 25% in the month of July, which is a risk for global steel prices. The problem is further compounded by weak data coming out of China. Put all these factors together, and Credit Suisse, they're fairly cautious on the steel space. Let's tell you about API Holdings, the parent firm of online pharmacy, PharmEasy. They have decided to withdraw its draft red herring prospectus filed with SEBI, citing volatile market conditions and strategic considerations as well. Yash Jain joins us to fill us in with more on that. Yash?
Well, looks like the route to Dalal Street wasn't an easy one for PharmEasy. That's because the IPO plans for this online pharmacy came to an end, at least for now, with an announcement from its parent company API Holdings suggesting that PharmEasy has decided to withdraw its IPO DRHP. Remember, this IPO document was filed with market regulator SEBI over a month ago. This IPO, of course, was very crucial for PharmEasy, as it would have helped the company raise about 6,250 crore rupees, the funds which were intended to be used towards debt retirement, also towards funding of its organic and inorganic growth opportunities. So, what happens to those objectives now? API Holdings has also said that PharmEasy will now consider launching a rights issue, which will be through issuance of compulsory convertible preference shares, or CCPS. These CCPS would be priced at about 100 rupees per CCPS, and that rights issue will open in the first week of September, will remain open for the entire month. Of course, rights issue will give the existing shareholders of PharmEasy an option to raise their stake into the company. But what will be important to monitor is that how this rights issue really values PharmEasy. Remember, this has to be compared to the recent valuation which happened just a year ago and valued PharmEasy at about $5.1 billion.
Thanks a lot for that, Yash. Well, on that note, though, we'll wrap up on this edition of Market Sell-Off. Thanks so much for watching.